Heading into the end of the year, it's always a good idea to do the financial checklist, and you know what I'm talking about. If you don't, even if you think you do, there's probably a couple of secrets that Morgan Hill can teach us from Hill and Hill Financial. Good to see you as always.
Thanks, Chip.
What do we need to consider, especially those who are already retired, when it comes to tax planning, number one, and tax prep, number two, because they're kind of two different things.
Yeah, two different things. On the tax prep, let me get to that first. A lot of folks who have now turned 73, and they have these things called required minimum distributions with those IRAs.
Right.
You can now do what's called qualified charitable distributions. Chip, you can now just give directly to the charity of your choice rather than taking that money as an income distribution and then donating to the charity and trying to get that write-off when you itemize. Standard deductions have become so robust that it actually is beneficial for many folks to donate directly. So you want to talk with your licensed professional, your CPA, to see if those qualified charitable distributions might be in your best interest.
All right, tell me a couple of the top mistakes that retirees make.
You know, one of the things that I see, especially as it relates to income planning, is not taking into account what we call volatility risk. Then we move into retirement and we're often convinced that the market over time is going to make it all work out. Over time, folks, I've seen it as a licensed advisor, the market does go up. But when you're trying to live on it month to month, that volatility risk is not something that a lot of folks want to take advantage of. So I just share with folks, map out that income. It's one of the top issues, one of the top concerns that we see.
Which is why we should go to the professionals at Hill and Hill Financial. Morgan, good to see you, my friend. The website, hillandhillfinancial.com.